Today, we're talking about Bitcoin's latest price dip. Yep, it dropped to just short of $63,000 and is struggling to make a comeback. And believe it or not, the Federal Reserve is playing a role in this. The Fed hinted at possible future interest rate cuts, and it's impacting the entire market, including our favorite digital asset, Bitcoin. So let's break down what's happening and what it means for BTC and the broader crypto space. All right, let's get straight into it. Bitcoin has dropped to just under $63,000, and it seems to be having a hard time bouncing back. Now, this is a bit of a surprise because the Fed hinted at future interest rate cuts. Usually, you would expect news of lower interest rates to be bullish for assets like Bitcoin. Lower interest rates typically mean more money flowing into riskier assets, such as borrowing becomes cheaper and yields from traditional instruments and investments like bonds go down. But here's the thing, it doesn't look like BTC is responding the way that a lot of people were thinking that it would. So why isn't Bitcoin rallying on the news of potential interest rate cuts? Well, there's a bit more to the story. While the Fed hinted at future rate cuts, they didn't exactly signal when this would happen. This uncertainty is keeping the market on edge. Investors are left wondering, when will the cuts happen, and will they be enough to make a significant difference? The crypto market is highly sensitive to any signals from the Fed, and it seems like traders are holding back on making any big moves until there's more clarity. And remember, Bitcoin's price is still influenced by macroeconomic trends. If there's fear of a slowing economy or concerns about how quickly the Fed will act, it can weigh on Bitcoin just like any other asset. Now, let's go ahead and talk about what people are saying on social media. Over on X, Reddit, and all the usual crypto forums, you're seeing some mixed reactions. A lot of people are frustrated, wondering why Bitcoin isn't rallying despite what looks like positive news from the Fed. Some are saying that the market might be overreacting to the uncertainty, and that once the Fed makes a concrete move, Bitcoin will pick up steam again. Others are a bit more cautious, suggesting that the dip is a sign that Bitcoin is still very much connected to traditional markets and macroeconomic trends. They're saying, hey, maybe this is a time to be careful, not greedy, and suggesting that it's better to wait for more stability before making any big buys. So what does all this mean for Bitcoin moving forward? Well, it all depends on what the Fed does next and how the market interprets their actions. If we get more signals of interest rate cuts and clearer guidance, we could see a strong rally for Bitcoin and the rest of the crypto market. But until then, this sideways movement and dips might stick around for a bit longer. For now, it's all about staying informed, keeping your eye on the macro trends, and not letting short-term price swings shake you out of your strategy, whatever that may be. Remember, in crypto, patience can pay off big time. Bitcoin is struggling to hold $63,000, and the Fed hints at interest rate cuts, but doesn't give any clear timeline. What do you think? Is this just a temporary dip before a big rally, or are we in for more volatility? Drop your thoughts in the comments down below, or join us in our free Discord server linked in the description. We would love to hear from you. If you found this video useful and helpful, don't forget to smash that like button. If you're new to the channel, make sure to subscribe and tap that bell so you never miss another update. And if you haven't done so already, guys, check out the video just here. It's not one you're going to want to miss.